we are going to discuss about the current ratio as well as quick ratio. We found out what are current asset and what are current liabilities. Current ratio formula is current asset divided by current liability. Two things we have removed. One is stock, another one is prepaid or advances. Hello everyone, this is your Adarsh sir, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. Now, we are in the session 6 of your topic called your accounting. In accounting, as you know, we are doing the topic, it is ratio analysis. Now, in the previous two sessions we completed regarding this particular topic. Now, what we covered or what we completed in your previous sessions. We completed your theory part of ratio analysis. What is ratio and why the ratio is needed? The role as well as key factors of ratio we have discussed. Along with that, we have discussed the types of ratio also. But in today's session, we are discussing and we are doing problems on your first type of ratio, that is called as liquidity ratio. It is only we consider for short-term basis. Anything we do it for short-term basis, we go for liquidity ratio. Now, under liquidity ratio, we go for two types of ratio, mainly your current ratio as well as quick ratio. The quick ratio also called as acid ratio. Now, under quick ratio, in the previous session, I have discussed what is current asset, what is current liability. For quick ratio purpose, the current asset will be considered as what? Your quick asset. In the quick asset, two things we are not supposed to consider, which are those. One will be your closing stock. Another one will be all the prepaid expenses. These two we have to eliminate. The rest of the things we consider as your quick asset. Now, in today's session, what we are going to do? In the today's session, the agenda is very simple. We are going to discuss about the current ratio as well as quick ratio. We'll do problems on current ratio as well as we'll do problems on quick ratio. So this is your problem number 3 we are doing. Now, under problem number 3, we'll read out the question. Later, we'll go for the answer. Now, as I told you, you must be familiar with all the current asset and all the current liabilities. Now, as per this, calculate current ratio and quick ratio from the following information. You are supposed to calculate current ratio as well as quick ratio. Now, under this balance sheet they have given, these are the informations they have given, particular as well as amount. Now, first one they have given as stock. Now, it is not visible. Later I'll go to that side. Now, first one is what? Stock. Second, debtors, bills receivable, advance tax, cash, creditors, bills payable, as well as we have bank overdraft. Now, how do we consider the current asset as well as current liability part? In this, stock, debtors, bills receivable and advance tax as well as cash. Up to this, we consider as current asset. Again, I'll repeat. Stock, debtors, bills receivable, advance tax as well as cash. Up to this, we consider as current asset. Now, from creditors, bills payable and bank overdraft, we call it as current liabilities. So, we found out what are current asset and what are current liabilities. Now, out of this, the current asset will add everything. 50,000 plus 40, 90,000 plus 10, it is 1 lakh plus 4, 1 lakh 4. So, this will be 1 lakh 44,000. 1 lakh 44,000. Now, if you add up all the current liabilities, 60,000 plus 40, it is 1 lakh plus 4,000, it is 1 lakh 4,000. 1 lakh 4,000. Now, you got your current asset and you got current liability also. What is the formula for current ratio? Yes, current ratio formula is current asset divided by current liability. What is your current asset? 1,44,000. What is your current liability? 1,04,000. If you divide whatever answer you get, we call it as your current ratio. Hope you understood what is current ratio. Now, we'll move for the answer. Whether it is a correct or wrong, we'll check. Your current asset, as I told you, we have to add everything. If you add everything, the total is how much? 1,44,000. Now we'll come back to current liability. If you add up all the liability, it comes around 1,04,000. Now, what is the answer? Answer is simple. 1,44,000 divided by 1,04,000 is your answer. Now, current ratio 1,44,000 divided by 1,04,000. Your answer is how much? 1.38:1. Whether it is favorable or adverse. Adverse means negative. Now, is it favorable or adverse? It is favorable. Why do we call it as favorable? The reason is you have 1.38:1. Your payable is only 1, but your receivable is more than 1. So this company, we call it as favorable. Now, we're done with your current ratio. We'll go for your quick ratio. Now, what is the formula for quick ratio? Quick asset divided by quick liability. Now, I'll go back to this. Now, these are the assets we called as current asset. These are the assets we consider as current liability. There are no changes in current liability, but in current asset, we have changes. Which are those? Like, out of this, as I told you, two things we will not consider for quick asset. These are current asset. So what is for quick asset? For quick asset, which are the two things we will not consider? Remember, the stock we will not consider. Debtors, we should take 40,000 and bills receivable is 10,000. Advance tax, should we take or not? Any expenses paid in advance or prepaid, we are not supposed to take. So we will not consider. And your cash is 40,000. Now see, these are your quick asset. 40 plus 10, 50 plus 40, it is 90,000. This is done. Any doubt in the quick asset? No doubts. Now, we'll come back for your current liability. No changes in the current liability. We'll take the same amount, 1,04,000. 90,000 divided by 1,04,000. Hope you understood. In the quick asset, only two things we have to eliminate or we need to remove. If you remove those, it will become, current asset will become quick asset. Your quick asset is called as your, how much you got? 90,000. As per our calculation, we got 90,000. Similarly, we did. So 90,000 divided by 1,04,000, your answer is 0.87:1. Never call it as 87. You should call it as 87, because once the decimal is done, after point, whatever you read, always while reading, you should say 87. It is not 87. Dot or 0.87. Hope you understood what is current asset and what is quick asset. Now, we'll move for the next problem, problem number 4. Later, we'll go for all your 15-mark problem. So, this is the last problem for your small type or 5-mark problem. Now, calculate current ratio and quick ratio from the following information. They have given balance sheet. With the help of balance sheet, we are supposed to calculate your current ratio as well as quick ratio. Now, as per this, we have inventory, trade receivable, cash in hand, current investment, trade payable, proposed dividend, as well as bank overdraft. Out of this, these things we call it as current asset. So, trade payable, proposed dividend, and bank overdraft, we call it as current liability. Now, you know what is inventory? Inventory means, remember, this is nothing but closing stock. Another name for your closing stock, we call it as inventory. Now, So trade receivable, you know that it is nothing but debtors because it is in the asset side. So debtors. Cash in hand is trade payable is nothing but your creditors. If it is payable, creditors. If it is receivable, we call it as debtors. Now, cash in hand over this you know. Now, what is proposed dividend? Any idea about proposed dividend? Now, I'll give you a simple example for proposed dividend. Like, you're running a company, XYZ, some company. Now, this year you got profit of 25,000. What you will do that 25,000? That 25,000 will be given to whom? All the shareholders. Now, all the shareholders, that 25,000 has to be distributed. Now, how you will distribute? In the form of dividend. Now, dividend means whatever the profit the company earned, that has to be distributed to the shareholders. Whatever has to be distributed to the shareholders, we call it as dividend. Hope you understood. Dividend, it is nothing but your portion of profit. How the surplus of profit distributed? In the form of dividend, the profit will be distributed. Now, so these are the current asset and these are the current liabilities. Now, how much the total? If you go for total, it will be 2 lakh 10, 2 lakh 32, 2 lakh 33, and it comes around 2 lakh 40,000. And if you go for liability, if you add 2 lakh 34 plus 6, 2 lakh 40 plus 60, it comes around 3 lakh. Your payable is higher than or greater than your receivable. Remember, if your payable is greater than your receivable, it is always what? It is adverse. It is not favorable. Why? Because whatever you have to collect, your payable is more than your collection. Now, so we got 2 lakh 40 and 3 lakh. We'll go for ratio. As per your ratio, first we'll go for current ratio. The current ratio formula is what? Current asset divided by current liability. Now, as per this, we'll add back all the current asset, your inventories, receivable, cash in hand, and current investment. Add everything. The total comes around 2 lakh 40,000. Now, 2 lakh 40,000, it is over. Now come back to your current liability. Now, liability, as I told you, how much we got in the answer? We got 3 lakh. Now, add everything, you got 3 lakh. Now, 2 lakh 40,000 divided by 3 lakh. Before this, remember, while writing your exam, you have to mention current ratio is equal to current asset divided by current liability. Without writing formula, please don't go for your final answer. Once you have to show the formula, later you can do working note and finally you can write your final answer. This is a proper procedure to follow or to write in your examination. Now, 2 lakh 40,000 divided by 3 lakh, your answer is 0.8 is to 1. It is favorable or adverse. As per this information, we call it as adverse. Why it is adverse? Why it is adverse means your receivable is lesser than your payable. Means if payable is 1 rupee, your receivable is only 80 paisa or 80 paisa. Now, so these all we call it as your current ratio. We'll go for quick ratio. Before that, under quick ratio, which are the things we are not supposed to take? Two things I told you. One will be your stock. Another one will be what? Any prepaid or advances. Now, so inventory also we call it as stock. Now, first one, we are calculating what? Quick asset. Now, inventory, we will not consider. Receivable, it is 90,000. Your cash in hand, 22,800. Your current investment, 7,200. What is the total? 1 lakh 10 and 1 lakh 20. Almost 1 lakh 20 is your quick asset. So which are the things we have removed? Remember, two things we have removed. One is stock, another one is prepaid or advances. Now, we have stock in this problem, but we don't have prepaid or advance paid. Now, that's why we don't have any advance payment. We have considered only one, that is inventory. Now, current liability, is there any changes? No, we will not make any changes. We'll write as it is. Now, how much you will get? 3 lakh. No more changes in this. We get 3 lakh. 1,20,000 divided by 3 lakh is your answer. We'll see for that. Now, as per your quick ratio, quick asset divided by current liability. What is a quick asset? 1,20,000. How come you got? As I told you, receivable, cash in hand, current, investment. Which one we removed? We removed inventory. Why? Because this is closing stock. Remember. Next. So total it comes 1,20,000. This comes around 3 lakh. How come it is 3 lakh? How come is the whatever we have considered for the last current ratio, same current liability we have considered now. So it comes 3 lakh. If you calculate, you will get 0.4:1. So your receivable is lesser than your payable. Now, so this is all about your quick ratio as well as your current asset or current ratio. Now, so I'll show you these two problems. If you want, you can take a screenshot. Later we'll go for the last problem of the day. So this is your problem number 3, solution part. Problem number 4, solution part. This is the second part of your solution. Now we are into the last problem for the day, problem number 5. Now, as per this, whatever information we have, try to calculate what is the current ratio, what is the quick ratio. Now, from the following, calculate following ratio. One is current, another one is liquid ratio. Remember, the quick ratio also we call it as quick ratio, liquid ratio as well as acid ratio. All three we call it one. That is current quick ratio. We can call it as a quick, we can call it as an acid, we can also call it as your liquid ratio. Now, as per this, you have current asset, you have current liabilities also. Current asset, it is 35, current liability 17,500. Along with this, we have inventory, operating expenses, revenue from operation, cost of revenue from operation. These three are immaterial. Operating expenses, your revenue from operation, cost of revenue from operation, these three we call it as immaterial. We'll go for the answer. Your current ratio, what is the formula? Current asset divided by current liability. Now, as per this, what is your current asset? I'll go back. Your current asset is 35,000. We have not considered inventory. Why? The reason is, it is assumed that the 15,000 already included. Again, I'll repeat. And they have given current asset and they have given inventory also. We assume as the 15,000 already included in the current asset. That's why we will not consider again. Now, so your current asset 35, current liability as per this calculation 17,500. Now, 17,500, 2:1, it is a favorable company. Why? Because almost your receivable is double than your payable. Your payable is 1, means your receivable is double to your payable. So we call this as favorable or benefited. Now, this is done. Now we'll come for liquid ratio. Now, under liquid ratio, the same formula we will consider, but what will not consider? Under current asset, how much we have? 35,000 minus whatever inventory we have, we are not supposed to take. How much we have? 15,000. Now, minus 15,000, your answer will be 20,000. Now, calculate for 20,000. Now, your answer is 20,000 divided by current liability. Is there any changes in the current liability? No. We have to take the exact value of 17,500 only. 17,500, 1.14:1. 1. Any doubt up to this? So I have not explained you anything in this. Why? Because the same thing we are doing in this problem. Now, so we have a small note on this. What is a note? Information on outstanding expenses, revenue from operation and cost of revenue from operation are irrelevant here. Hence, these items are ignored in the question. As I told you, these three are irrelevant. These three are we considered as irrelevant. That's why we have not considered in our solution part. So I'll go back so that you can take a screenshot. Your problem number 5. This is the question part. Your solution. Your next part of your solution. Yes. So this is all about your today's session. As I told you, we have completed your first type of ratio. What is it? Liquid ratio. In the next session, we'll go for some other kinds of ratio, or else we'll work out your 15-mark problem for ratio along with balance sheet. Thank you.